All right, fam. All right, fam. All right. If you can hear me clearly, let me go ahead and do this right quick too. If you can hear and see me clearly, drop a number one in the chat. Drop some ones if you're just blessed and grateful just to be on this call. Y'all can see me and y'all can hear me clearly. We good? Let me know. Let me know. I don't see one. All right, I see some ones. I see some ones. I see some ones. All right, fam. We're gonna get into it. We're gonna get into it real quick. All right, let me adjust this right quick. Boom. So y'all saw it's gonna be an HFX cash session. You know what I'm saying? But before we actually get into the products, before we actually get into the services offered by I Am Master Academy, there are some prerequisites that I actually want to go over with you guys. Because with HFX, it is predominantly, support and resistance, normal levels, key levels. So I'm actually going to why the products work, how they work, and just that whole how. So it all stems from support and resistance. And y'all know how I do. If y'all have any questions, drop them in the chat. I have the chat open and everything, so just drop it in the chat, and then I can go back over it. And is my screen mirrored? Drop a 2 if you can see it like the right way. If it's not mirrored, drop a 2 in the chat. If it's not mirrored, I want to make sure everything good before I start talking. All right, boom. Drop some 2s if it's not mirrored. Because I want to fix that now. Because I don't want to be talking. Okay, boom. Are we good? We good. All right. So the first thing we really got is support or resistance. So let me get my handy dandy markers. So boom. The red one right here, this is red. It's not too visible, whatever. This blue is more visible. But, we're going to go ahead with it anyway. So the red right here, this is going to be resistance. That's going to be resistance. Resistance basically means, hold on, the ceiling. That is what resistance is. For this room that I'm in, like, just say it, for instance, can y'all see your screen? You can't see my screen, bro? What can you see? All right, hold up. What can y'all see? I just see logo. Hold on, let me go ahead and fix this right now. Let me see. See if there's a way to spotlight my video. How about now? What do y'all see now? We see our zoom. We see the zoom pick, the same thing. All right, boom. Let me fix this right quick. Boom. Y'all can see my video now? Y'all can see the board? We solid? All right, boom. There we go. We with it. All right. So like I'm gonna just start all the way over. Yeah, y'all on the ones. Y'all on the ones for real. But like I said, it all basically stems off of support and resistance. And I have a little diagram right here. This line right here is red, just because that's what we're used to. Red is the resistance and blue is the floor. So just for the sake of the example, this room that I'm in, for instance, if I jump up and I hit that ceiling, what's gonna happen? I'm gonna come down. And if I let's say that the floor is a trampoline and I hit the floor, what's gonna happen? It's gonna go back up. And it's gonna keep happening. It's gonna keep happening like that. So I just wanted to go and just basically show y'all how support and resistance works. And this black is gonna be the market. So the black is the market. Black is the price. So if price starts here and it goes to the ceiling, what happens after it's gonna hit the ceiling? It's gonna come down to the floor. Then it's gonna bounce up to the floor to the top. And it's gonna keep doing that. Now, that is basically what support and resistance is. This is the perfect scenario. Now, the next thing I actually want to go over pertains a little bit to the products. So if we take what we just learned about support and resistance, we can now see that the market moves in three ways. It moves, hold up, I'm gonna draw it out. And then, all right. All right, so the market moves in three ways. It moves sideways, like we just saw, that is called consolidation. If you're not taking notes, take notes, because I'm finna learn you something. Like, I'm not just gonna go into the products. I'm finna go into how the products work, what product to use when the market is going in one of these directions. And you finna be smart. Not that you're not smart already, but still. So, number one, it moves sideways. Consolidation. No, I know, I mean teach, but it's a part of this joke. That's why I say I'm finna learn you something. But yeah. But boom, the first one is called consolidation. That's when the market moves side to side and it plays between what we just learned, support and resistance. That's what happens. The market just plays between support and resistance, and it don't go outside of the support or resistance. Now, number two, this is called a downtrend. Actually, no, I'm not gonna write it out. That takes too long. But this is called a downtrend. And a downtrend basically means that it's not confined to support or resistance. However, there are levels of support and resistance within a downtrend. I'm gonna repeat that again. A downtrend is just basically going down. However, there are key levels of support and resistance within the downtrend. So as you can see, it generally is in the downward direction. But you can see that it comes up periodically. I'm gonna draw a dotted line. Maybe y'all can put two and two together what I'm finna say. All right, so look, like I said, this is a downtrend. It's not confined to support or resistance. However, there are support or resistance within the downtrend. So look, if it's coming down, it's gonna come up. Now look, boom, here the eraser go. I'm gonna erase this. Look at that. Now look at this. Then it's gonna come down, and it's gonna come back up. Now watch this. Boom, boom. Now watch this. Boom, boom, and so on and so forth until it goes back into consolidation. So there are support and resistance within a downtrend. And that's what's going to help you pick what product to use. So just remember that. And it's the same thing, except in reverse on the uptrend. So you can see that exact same thing on the uptrend right here. Boom, boom, boom. So I just wanted to really point that out because there are different products that fit however the market is moving right now, because throughout the day, the market could be in any one of these phases. It could be in phase one, phase two, or phase three. And based on what direction the market is moving at any particular time determines what product that you can use or what product will be best to use. So in this case right here, phase one, consolidation, the best product to use will be the simple scalper because the simple scalper works best when the market is consolidating. That means this. Now, if you want to use when the market, let's say the market is in a downtrend or it's in an uptrend, the best strategy to use would be web slinger, would be cash trap, because those work best when the market is moving. But when the market isn't really moving, it's just going up and down, the best one to use is simple scalper. And that's actually the one that I'm gonna start out with. So before I move on to actually show y'all like the products and stuff, does anybody have any questions about what I just said? If everything is good, drop a 5. If you have any questions, drop them in the chat. I see a 5. If anybody has any questions about what I just said, all right, everybody good then? All right, so boom. I'm finna come over here to my little handy dandy table. All right, so web slinger and simple scalper. I'm finna go over all of that right now. Boom. So I'm gonna go ahead and share my screen. All right. So let me go ahead and pull up the chat box. Give me 1 second. Plug in my second screen. All right, let me open up the chat box so I can see what y'all talking about. So if y'all can see my screen, I'm gonna do the first one. No, not that one right now. If y'all can see the Liberty scanner, go ahead and type a 1 in the chat. If y'all can see simple scalper and all of that. All right, boom. So it seems like I'm good. So now I'm actually gonna go ahead and explain. Let me plug in my charger for my laptop die, and then we're gonna get into it. So traditionally, what we go into, what we have, and how we trade is off of hourglass and the cash trap strategy. But if you pay for the HFX package, you get Liberty default. And with Liberty, there are 3 strategies. There's simple scalper, there's web slinger, and there's pit pocket. So the same general idea on how you would move about on cash trap or hourglass is the same concept for simple scalper. So if you want to get to your other strategies, you will just pick here. Now the way that I got here, let me go ahead and do that. So I actually I do the website that way. So hourglass, basically all of the products are like this. So if you want to go to Gold Cup, it's goldcup.im. If you want to go to Hourglass, it's hourglass.im. If you want to go to Liberty, it is goliberty.im. But if you don't want to go that route, you can do this. I'm going to go ahead and do let me see if I can get by. Boom. There we go. So if you want to go to your im.center, then you can log in here and go that way. Boom, let it load up. Boom, 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 boom. Then you'll go to strategies, scroll down, go to strategies, just like how you would go to any other little strategy. I'll move this over here too. All right, so you scroll down, then you'll get HFX right here, and then you would just go to Liberty or Hourglass, one of the 2. There's also another one, Freedom, but I have to get into that another time. So I already showed you that. Now y'all know how to get here. So boom, let's dive into the simple scalper. Let's go ahead and do that. All right, so the simple scalper is actually pretty easy to look at. It seems like it has a whole lot going on, but it don't have a whole lot going on. Like it's a few key. Hold up, oops. Let me log back in right quick. Boom. That's the 10 a week. What you mean, bro? What you mean 10 a week? So boom, let's go into it. So the key thing that I really want to point out is these big simple scalper is the same as hourglass. There are a few different things about it. Simple scalper, there's like a couple more confirmations you can look at, but the most drastic difference is that cash trap works when the market is moving and when it's consolidated. But this works better when the market is consolidated because you can actually pinpoint easier where the market is going to go. Because like I said, consolidation displays in between support and resistance. And you can actually point out where support and resistance are based on these They call them Bollinger Bands. And matter of fact, I'm gonna show you better than I could show you better than I could tell you. So I'm gonna open up the handy dandy hourglass cash trap. Now I'm gonna show you the differences. If we can open up, boom. All right, so you can see that it kind of looks the same, but you know, you can see right here on Cash Trap, these red, as Malcolm calls it, Twizzlers, these things right here, that's the resistance. That's what I was just talking about. This is the resistance. And this turquoise teal is your support. This purple line right here, he calls it the enemy, but this purple line is your 200 MA. Your 200 MA is that's basically what you gaze your, trades off of. But right here, if you go to Liberty, you see this red right here, it's just one bold line. And this bold blue line, they serve the same purpose, support or resistance. Except when you go to Hourglass, they're broken up into 3. And the wider they are apart, the weaker the support or resistance. I want you to write that down. The farther apart they are, the weaker the support or resistance. So you see that, sometimes they're a little spread apart. Sometimes they're a little spread apart. That means that it's a weak resistance. It's a weak support. But the closer they are together, the stronger the support. But that's on Hourglass. On Liberty, on the simple scalper, it's just one bold. So the closer these two are together, the weaker the market is. The farther apart they are, the stronger the market is. Because you can have room to take your trades. Let me see if I can find an example. So right here, let me see if I can get my little draw. So this right here, you typically do not want to take trades when the two Bollinger Bands are this close together, because you don't have any room for your trades to, actually develop. You want them to be, generally the simple scalper, they'll be about like right here. This is normal. This is normal range right here. If they're this far apart, that's good. So now I'm actually going to go into the confirmations. So we just talked about, the Bollinger Bands, aka your support and resistance. Now that's actually the first confirmation. The first confirmation is identifying where the market is right now. So as far as simple scalper, hourglass, cash trap, whatever you're using, the market can be in either one of 3 places. It could be on the higher side, it could be normal, or it could be on the lower side. And I'm actually explaining what that means right now. So on your support or resistance, in between, I'm gonna zoom in a lot so you can see it. You can see the support, you can see the resistance right here and the support right here. But you can also see you have this red line. Let me see if I can get you an arrow. Right here, you have a faint red line. That basically signifies median. Median means the middle of the market. In this case, the purple line is in conjunction with that red line. And, you can consider it as your quote unquote enemy, but it can also function as a sense of support and resistance too. Because look right here, let me give you a key example. So like I said, we're not just gonna go over confirmations and go call it a night. I'm actually break down how this actually works too. So right here, in the market, there's what's called key levels. And the purple line is one of them. What's the upper band called again? No, you're perfectly fine. No question is a bad question. The upper line, that red line, is called a resistance. Typically when you see red, is resistance. So when you see resistance, it's gonna come up and then it's gonna shoot back down. Think of these as trampolines. So this one, the trampoline is facing this direction. This one, the trampoline is facing this direction. So when it hits it, it's going to shoot back down in the opposite direction. That goes for both of them. If you hit this one, it's going to shoot back up in this direction. So this purple line is going to act kind of toward, yeah, this right here. The purple line right here. That purple line right there. 8 times out of 10, that's going to be your kind of your median support resistance. That's going to tell you where the market is normally. So, like I said, it could be in one of 3 places: the higher side up here, the lower side down here, or like kind of in the middle. If it's in the middle, it'll kind of play in that area for a while. So you can see right here in this box, it kind of plays around that purple line for a while. It don't go towards the resistance or the support. It just plays around in that purple line area. The same goes for, in this case right here, this red. This here, boom, boom. And one thing that I generally have noticed is that when the red line and the purple line are close together, or they're like kind of twisted together, then the market is going to kind of play in that area for a while. See, like right here. And then once it goes above, then it'll go towards either the resistance, or if it goes below, it'll go towards the support. Now let's go into the rest of the confirmations. Boom. So the first confirmation we went through is the support and resistance. Those red and blue Bollinger Bands identify where the market is. If it's on the higher side, if it's normal, if it's on the lower side. Now the next confirmation is going to be boom, boom, boom. It's going to be identifying where the purple line is. So if the purple line is below, look for it to go into the red direction. If it's right up on it, you're probably going to be looking for a call. But if it's below, you're probably going to be looking for a put. And these are going to be aided by these little dots. I'm not too sure what these dots are called, but all I know is that these dots follow the market. So wherever these dots go, the market is going to follow. Yes, I'm recording. So look, I'm gonna take this for instance. Let me give you a little trend line right here. That's probably the best example I can give you. It's gonna shape like a trend line. So you see these purple dots right here? Follow the market going right here. And I'm yeah, parabolic dots. That's what it is. You plugged into Millie Mills. I know who plugged into Millie Mills. So boom. So I'm gonna kind of draw this out a little bit just so y'all can see. Boom. So these little dots, boom, 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 represent a trend. Like I said, you have either an uptrend or a downtrend. So these purple dots are going to follow the market, and these are going to actually help you tell you what position to put. If you're looking for a call, let's say you're looking for a call, you want the purple dots to be on the right of the market, on the bottom of the candles, going in the up direction. Let me see if I can get an arrow. I like to show people. Hold up. Oh, I can't get my arrows right today. But you want the market, you want these purple dots to go this way. That's what you want. Now, if you're looking for a put, you want the markets to be on top of the candles going down. That's what you want. In this case, it'll be this one. This one right here. You see how the purple dots kind of go in this direction? On top of the markets going down. Boom. And then back down here, you're looking for a call. Purple dots below, it goes up. Hold on, Boom. Now, let's kind of recap a little bit. I'm going to delete two of these, just so y'all know. The first confirmation, Bollinger Bands. Identify where the market is at. 2, identify where the purple line is. If it's in the middle, fine. Now, the third confirmation is look at your parabolic dots. The parabolic dots are going to tell you everything. Parabolic dots don't lie. If the market says it's going up, the purple like little dots, parabolic dots, will show you that it's going up because they'll be going in this direction on the bottom of the market. Now, if you want to kind of double check that, because sometimes the markets be tripping a little bit. So if the parabolic dots are still above, but it's telling you to do a call, don't get in it, because that's most likely going to be like a fake out. Don't do that. The parabolic dots will make a smooth transition between going up on top and then going down on the bottom. It'll make a smooth transition like you see right here. It touched the Bollinger Bands and it sprung in the opposite direction. It sold. The parabolic dots were above the candles going in the down direction until it hit, not quite towards the support, but it came back up on the bottom. That's your third confirmation of those parabolic dots. Now the next confirmation is going to be called volume. So like I said, the simple scalper works best when the market is consolidating, but it doesn't catch every single opportunity position. So you have these right here. These are called volume bars. So let's take where the market is right now. Boom. Now, I'm going to run through the confirmations real quick. So I identify where my support resistance. I identify where the market is at. The market is right at median. That's right in the middle at normal range. It's not going towards the support or the resistance, but the candles are red. So that tells me that it's looking to sell. It's looking to sell, but it's not quite there yet. So guess what? I identify where the market is. I identified where my support and resistance. Now guess what I have to do? I have to look for those purple dots. And right now I see that the purple dots are kind of in a line. I see one right here. That means it's going to kind of look to, come to the bottom. And I see another one forming just above the candle. So that means it's going down. Now, the next confirmation is going to be looking for that red volume bar. So you can see you have little green ones and then you have red ones. The red ones mean sell, the little green bluish ones mean buy. So when you're looking for, let's say I'm looking for a sell still, I would be looking right now for a red volume bar. So the phrase, I identify where the market's at, I identified the purple dots, now I'm just waiting for a volume. If I don't see no volume, I'm not going to get in a trade. Because you want everything to line up. The more things you have lined up, the better. Now, these next two down here, if you know, cash trap, who out here knows how to use cash trap? Drop a 3 in the chat. If you know how to use cash trap. I see 1 3, 2 3s. If you know how to use cash trap, drop a 3 in the chat. Okay. I see a few 3s. But not everybody knows how to use it. So I'm actually tag that on at the end. So right now I'm actually going to detail. The first one right here, this first little box, that is called your RSI. Your RSI is generally going to tell you, where the market is right now. So look, I identified earlier that the market is kind of in the middle. And when I said it's in the middle, and it can go either way, really. It can go up or it can go down. But the RSI right now is telling me that it's going to start buying up to the red line. So you can see how it kind of confuses you. That's why you want everything to line up. So this RSI and down here, the stochastic will tell you everything that you need to know. So right now, it's telling me that it's starting to buy, and buy means it's going towards the red. So that means eventually this red candle right here is going to turn blue. And if it don't, it's going to turn blue. I can't see the time. In 2 minutes. So if I identify the Bollinger Bands, I identified the purple dots, I didn't see a volume, but I'm looking at my RSI right now, and it's telling me it's buying up. And in Cash Trap, these two, you know, I don't know what to call these bars. These two things right here are the exact same. They're going to tell you the exact same thing on Simple Scalper and on Cash Trap. So when it's crossing up this blue line, you're looking for it to buy. Yeah, RSI is stochastic. If it's crossing up this blue line right here, it's gonna buy. Like I said, this red candle turned blue, and then right here, this stochastic, it came down towards the blue and it shot up. And I'm gonna tell you this right now: RSI is quick, stochastic is slow. So the RSI is always going to be ahead of the stochastic. Now, if the RSI is going way down and the stochastic goes way down, it's going to be a massive shoot up unless it has news. So remember that the stochastic is always going to be delayed by just a little bit. You see the RSI crossed up, but the stochastic, you know, it didn't quite make it. But it's still going in the upwards direction. So that's why I said the stochastic is going to be a little delayed. So this one right here ain't really a good trade to take. I'm gonna see, you know, just to give you an example. I'll do this one. This ain't a great example, but I'll do it. So the first confirmation, identify where the market is at right now. It's on the lower side. So I can expect it, you know, to come down towards the blue, that, you know, support, and shoot back up. Right now, it ain't quite there. It's kind of like in the middle. So I look at my parabolic dots. Your parabolic dots should be either going down or up, never to the side, never like going towards the line. If it's going towards the line, the market ain't all that strong. You don't want that. So, you know, that didn't match up for me. Now the next confirmation is going to be the volume. And this is a new candle too. So, you know, the candle right now is blue. So if I was looking for a call, I would be looking for a green, you know, volume bar right here. And another thing about these volume bars, you want the volume bars to be as big as possible. The bigger the volume bar, the bigger the momentum in the markets. You want the most momentum so that you can be in and out with a bag. That's what you want. Now the next two down here, the RSI, is kind of fidgeting around that blue. You can see, you can reflect it right here. It's playing around on that blue. And so is the stochastic. So this wouldn't be a good trade to take. But now you know the confirmations. Identify where the market is at. Let me see if I can find a good example. I'm gonna go right here. This is decent. And this general area right here. I know this is the market, the little, like, they're kind of narrow, but this is the best example I can find quick. So I'm gonna change the color too. I want to do transparent. So this box right here, I'm gonna move this a little bit inwards. All right. So this is what we want to look at. Identify where the market is at. Right here, it's, you know, it's touching that red. It's touching that resistance. So what can I expect it to do? Shoot back down towards the floor, the support. Now I identify where the market is at. Now I want to identify the parabolic dots. Now if I slide this over right here, the parabolic dots are above the market going all the way down. It's not towards a line. It's not on the bottom. They're all on the top, and they're going in the downwards direction. Now, the next thing I'm looking for is the volume bar. I see this volume bar ain't all that big. So I'm gonna do is I'm gonna be patient and I'm gonna look for the next one. The next one is bigger. So I'm gonna say, okay, that works for me. It's red is a decent one, and I know it should be going down in the opposite direction. Now I check my other two confirmations, which are gonna be your RSI and your stochastic. Now your RSI is crossing down. That's already a good sign. And it has a lot of momentum going down. The steeper this line, the faster the momentum. And I check my stochastic, and it's following the stochastic too. It's crossing down that red line. So that would have been a good trade to take. And as you can see, you would have been in profits. So before I move on to the next product, does anybody have any questions on the simple scalper? If you're all good, drop a 5 in the chat. If you have any questions, you could drop them. All right, I see some 5s, see some 5s, see some 5s. So before I move on, just want to reiterate that this works best when the market is consolidating. I don't know what the market is doing right now. On some of these, it's consolidating. It depends per pair, but I didn't actually check beforehand. But now I'm actually going to go to Web Slinger. Now, this one, I give you a fair warning. It looks like it has a lot going on, but it's easier to read than you think. There's only one confirmation. No, there's actually two. There's two confirmations. Oh, all right, boom. There's two confirmations for the Web Slinger. And this thing right here, this ain't nothing to play with right here. All right. So I'm going to take this box right here, for instance. I know it looks crazy. It looks crazy, but I'm finna put you on game. Watch this here. All right, look. First thing you want to recognize. No, there's two things you want to recognize when you first open it. One, you want to recognize where the cloud is. This right here, this red, greenish type of thing right here, that's the cloud. You want to stay out the cloud. The cloud, no. You want to stay out the cloud. Make sure this is either below or above the cloud. If that's the case, you Gucci. The second thing you want to realize is if the web is all close together. If it's all close together, you don't want to take no trades. Just be patient. It'll open up after a while. And, just one more thing that I've actually began to notice is that if the market is in the cloud, the web closes up. So you see how the market is in the cloud right now. And you see how the web closed up. You don't want that. You want to be patient with it. Be patient with it. It's going to open up after a while. So I'm going to go to the example. This is the confirmations. If the web is below the cloud, you're going to be looking for puts. That's all. You're not going to be looking for no kind of buys, no nothing. You're not going to be looking for no kind of calls. All you're going to be looking for is puts. Now, if the market is above the clouds, all you're going to be looking for are calls. Because remember, the web slinger works best when the market is in a trend, when the market is actually moving, like quick. So typically probably in the morning time. What time is this? 14:50? I don't know what time it is. This, yeah, countdown is on. The product time is always off. So UTC, something like that. I don't feel like changing it. But I'm gonna take this example right here. So you can see, last thing you want to realize when you're actually looking to trade is this green line right here. This thick green line up under the web. Right here. That's what you want to look for. This green line right here. That green line, that's your friend right there. It's green for money. Because it's a lot of bags to be made with web slinger. Because watch this. Look, follow me. I know the way. I'm going to take this whole thing, for instance. This whole box. Look how many opportunities there is to trade just on this one box right here. So, the market comes down, right? Comes down, comes down, comes down. But look, once it comes down, it's going to turn around because the market can only move in two directions, up or down. But when it comes back up, you want to look for the market to touch the green line. Once the market touched the green line, it's going to go. It's going to sell. Look, boom, sell. Now, if it comes up, it goes down, comes down, comes down. It's going to go up. It's most likely it's going to wick towards the green line. Then it's going to sell again. Then it's going to come back towards that green line. Now, this is another thing too. Like I said, below the web, you're just going to be looking predominantly for puts. In this case, if it crosses the green line, it's going to retrace. Retrace means that, it's going to go and then it's going to come back. When it comes back, it's going to go back up. It's like this. You're just looking for it to go either up or down. So like I said, I'm gonna recap. The market came down. When it turns around, you want to look for it to touch the green line. Want to touch the green line? Enter a put, a 3-minute put. You're in profit. You can even do it again. It comes back up towards the green line, sells again. That's 2. This one didn't quite hit it, really, but if you really was paying attention, you could have caught it. So if you put it up again and you sold, boom, that's 3. You're 3-0 right now. Now let's say it comes back up, it crosses the green line. If a candle closes above the green line, crossing the green line, look for a call. It's going to come back down. It's going to retrace. You never want to get into a trade on a retracement. Never do that. Like, I promise you don't want to do that. Now, once it touches that green line, it's going to go back up. Now, you can see that it came back down and the candle closed below the line. So once it closed below the line, it's going to touch the green line again. It's going to sell. And it touches the green line again, it's going to sell. And it's going to keep selling until it touches the green line again. Then it's going to sell. Then it crossed. Then it came back. Then it shot up. And you can see it kept doing that. And then it got into the cloud. So you can see how many opportunities there are to trade just in this box right here. Because look, I'm gonna put you an arrow right here. Let me see if I can twist it around. That's an opportunity to trade. This is an opportunity to trade. Boom. This is an opportunity to trade. Like I said, if it's below, you just want to look for sales. If you want to, and if you know if you kind of know what you're doing, and you can kind of pinpoint where the market's going to go above, but you don't want to get too close to the cloud. That's what you don't want to do. If it's anywhere near the cloud, don't take the trade. That's the one thing about web sling you got to realize. The cloud is the enemy. The green line is your best friend. As long as those two don't meet, you good. All right, boom. Let's go over this one right here. That's another opportunity to trade. Boom. This is another opportunity to trade. Boom. Now, before I start moving on to, call examples, does anybody have any questions on the puts? Does anyone have questions on the web slinger in general? If you don't, drop a 5. If everybody good, I don't want to lose nobody. If you have questions, this is the time to speak now. Because after this, I'm gonna finish it off with Cash App. Then I'm gonna let y'all enjoy y'all's night. All right, seems like everybody's good. Well, I see 2 5s. Everybody good? Y'all have any questions? I'm gonna look for. Boom, I see small 5s. My boy Rod the guy always come deep with those 5s. Whatever number is called. Boom. I'm gonna just do this example. It's not quite as big, but it's an example. So boom, you see that the market briefly is above the cloud. So once you see that the market has cleared the cloud, you want to look to trade. So like I said, the green line is your friend. So you see that the market shot up and shot up. You're looking for it to touch the green line. And it does so right here. If it retraces to the web, more specifically the green line, you're Gucci. Let's see if I can turn this around. Right there. That's a good opportunity to trade. It went, came down, shot back up, came down, shot back up. Then it went back into the cloud. So I'm finna do another example. Here's a good one. Here's a great one. This one right here. For a call, yes. Now I'm gonna give you a better example. That was just a little like, just to show you what I was talking about. This is a better example. So right here, this is at this moment, the market cleared the cloud right here. The cloud is in this area, but the market cleared it right here. So you can see, like I said, the cloud and the green line don't like each other. And the kind of analogy that I give is that whenever the green line and the cloud meets, they scrapping. That's why they're so close together, because they scrapping. But if you're above, the web just opens up. You can see how the web opens up. And this is the perfect opportunity to trade because there's so many opportunities. So like I said, if it crosses up the green line, it's gonna come back, it's gonna come back down. Once it touches the green line, it's gonna shoot back up. And it's gonna come back down, shoot towards the green line. Once it touches it, it's gone. Then it's gonna come back down, it's gonna shoot back up. It's gonna come back down. Now this one right here is actually gonna get a little tricky. Like I said, you want the candle to close below the green line. Right here, the candle didn't close like on the green line. It's kind of finicky. But guess what? It came back up. Shot back down, came back up, came back down, shot back up, came back down, shot back up. This one is a little hairy, but you're still in profit. Then it just keeps on going till it decides not to. Once the candle closes, right here, once the candle closes below the line, you good. So how long should we place the buy on these trades? It's all the same. 3-minute trades, 3-minute calls, 3-minute puts. So it's all the same. Really, you can actually double up on these too, because this is 5 minutes. And I'm gonna tell you, once it comes down, it's going to go up for at least 2.5 to 3 candles. That's just how the web slinger works. So if it comes down, this candle that's the institutional candle. That's for another time. Call it for both of them, for calls or puts, 3-minute trades. For all of these, they're gonna be 3-minute trades. So if it goes down and it comes up, this is a big one. To me, this counts for 2. If you want to go in twice, you can, until it comes back down. And guess what? It's going to go up for at least 2 to 3 candles. Then it's going to come back down. It's going to come back up, go back down, go back up, 3 candles, go back down, go back up, go back down, go back up. If you want to have easy money, like, you have you have no question whether you're going to clear the trade or not, you can ride it out for 3 minutes. I mean, not 3 minutes, 15 minutes. Because with the web slinger, it's going to go up for 3 candles. Is it normal for the candles to be long like that? No. No. I'm going to explain why. Because in the foreign exchange market, at the end of the day, HFX is Forex. It's just quicker. So, you have all of these bigger institutions that want to capitalize on your money. So if you've ever been on a call, I mean not a call, if you've ever been in a trade and it seems like you in profit, but at the last 2 seconds it spikes you out. If that's ever happened to you, drop a 5. You finna clear the trade. You thinking you in profit. You thinking you in the bag, but all of a sudden you got spiked out. I'm gonna tell you what that is. The reason why I called it an institutional candle is because different banking institutions, different financial institutions come in and they want to capitalize on your positions so that they can have higher or better positions. So, JP Morgan, Chase Bank, all of these major banks participate in these markets. That's a whole nother training. That goes more and more and more into actually how the markets move. Like this right here, the strategies make it easy. But whenever you see a big candle like this, especially this is HFX, and you still see this big old candle, and it's quick. So that's how you know an institution has came in and has manipulated the money. Is all of that info in the academy? Some of it. All right. So in the basics, it kind of covers it. But if you want to know more, that goes more into FRX. That's what that goes more into. And Zach and Jordan actually, they do a great job of explaining all of that. But I just gave you a basic synopsis. So I'm gonna hold up. Let me actually go into it. Let me do this right here. I'm gonna share my little whiteboard. So most of you, if you've come in the past month, you really don't know too much about this. But in regular FRX, this I'm gonna do black. This black line is going to be your position. Let's say that you're looking for a buy and your take profit is up here. Your take profit is up here and your stop loss is down here. So basically what an institutional candle will do is it'll come down like this. So your position, it'll come up, it'll show you what you want to see, and then it'll shoot down, stop you out. It'll go down your stop loss, and you thinking, oh man, I'm out the trade. Oh, it hit stop loss. Then it goes and it turns around to take profit. So your whole rationale is I'm gonna put it in this position right here because the product told me to, and I'm gonna go to this TP right here because the product told me to. But you let's say this is 70 pips, and your stop loss is 20 pips. You satisfied with a 70 pip take profit, but the banks, what they want to do is they want to come in. They want to, because 9 times out of 10, there are going to be a lot of people with the same position as you. Whenever you enter in the trades on Go Live, imagine how many Go Live people are on at the same time, putting in the same position, and they all got stopped out. But guess what? Since you had this position, you were satisfied with 70 pips. The banks, they want 90. They're going to stop you out, and they're going to enter right here. Once you're out, they're gonna come in and they're gonna buy up, and that's where these big candles come on. Because if they want to make it seem like it's normal, they want to make it seem like it's sweet going down, and then that's when you come in and you see these big candles, these big long candles. That's why they call them institutional candles, because the institutions are coming in to take your money. That's why you got to play smart. So boom, that's my little spiel on, institutional candles. So it's not the market, it's the institution. Yes, basically. Because the institutions move the markets. At the end of the day, people move the markets. Because whenever you go and you trade your money at a different country, you change, you participate in the markets. But the banks have a higher say so. So whenever they decide to come in, that's when you see the big candles. So rollover. All right, you want me to go over rollover? Let me that a second. Let me share my screen a little bit. Share screen one. All right, so I kind of went over Web Slinger. Y'all good with that? If y'all good with Web Slinger, drop a 5 in the chat. All right, so y'all good with Web Slinger. Now the last thing I'm gonna finish off. This will actually, where can I find this recording? Lots of info. I don't want to rewatch, compare my notes. I'll send my YouTube channel. I'll post it on YouTube, and I'll put it in all the chats, so I have it. And then so boom. Hourglass. So I'm good. So Hourglass. This is like this right here is where we make all our money, basically. So I went over the Twizzlers, the green Twizzlers, the purple line, the 200 MA, the median value in price. So now it's time to put all of that knowledge together. So my first confirmation that I want to do on Hourglass is I want to identify where the market is at right now. So the market is on the higher side, is going towards resistance. And it's going to tell me that because it's going to give me an arrow. So it's going towards resistance. So I'm going to be looking for the market to shoot down. Once the market kind of shoots down, I can gauge my trades off of that. So what you want to do is you want to identify where the market is at. Then the second confirmation, you want to look at the arrow. If the arrow is pointing down, you're going to be looking for a put. But don't put it in just yet. You want to line some other things up first. So the next thing you want to do is you want to look at your RSI and your stochastic. The RSI right now is telling me it's crossing down the red line. It's telling me that it wants to sell. And the stochastic. The stochastic is crossing down right now. And you know how I know this is going to be a strong move to the downside, which means a put, is because even the stochastic caught up to the RSI. Like I said, the stochastic is slow. Like oftentimes the RSI is going to beat the stochastic. So it's going to come down. Right now, this candle is blue. Let me see how much time is left. Turn on my countdown. Where's my countdown? It must be getting ready to change candles. I don't know. But that's basically all the confirmations there are. So you identify where the market's at, will be in profit. So you want to identify where the market's at. Right now, it's on the higher side. It is on, it's coming down. Second confirmation, you want to look for the arrow. The arrow is telling me it's going to go in the downwards direction. Next, you want to identify where the purple line is. In this case, you don't want to go towards the purple line. Look, it just changed. So if the arrow is pointing towards the purple line, so in this case it's not. So if the arrow right here is pointing towards the purple line, go to another pair. Wait on it. It's gonna come. Let me see. Euro USD. Invalid symbol. Hold up. What's going on? Let's see. All right. So this USD CAD right here. Let me go to Euro USD. Ooh. So look right here. I'm gonna identify where the market is at right now. I'm gonna take, you see this long candle right here? Somebody tell me what this candle is right here. Let's see, we'll learn something. Now I'm looking for something specific. Hey, institutional candle. There we go. My boy Jarrell in the back. I see y'all. Yes, sir. We're finna make some money today. All right, boom. So identify where the market is at right now. The market right now is on the lower side. It's going past the support. So I should be looking for it to go back this direction. And right now I feel like this arrow is finna change because guess what? Once I identify where the market is at right now, I identify this arrow. Right now the arrow is going in the downwards direction. It's going opposite of the purple line. So in this case, like I don't want to confuse y'all, but that's a red flag right there. Because how the market way down here, and it's gonna give me a red arrow going even further down. So right now, I'm finna look for this, arrow to switch. Now I'm gonna move to the next two confirmations. RSI is crossing up that green line that's telling me to buy. And the next one crossing up that green line, telling me to buy again. So all I'm waiting for is this red to switch. I don't know what it's doing right now. I can't see the time. It has to be switching. It's a minute left. So after this minute left, what pair is this? Euro USD? It's gonna switch. I'm telling you, it's gonna switch. All right, boom. So let's move on. Let's see if I can find a better example. This is a good example, actually. All right, look at this here. All right, so one, you want to identify where the market is at right now. Even though like the little Twizzlers are narrow, I like once this minute passes, it's going to be a little bit better. But it's on the lower side right now, and it hit the support. It's going back up, and I can support that with that arrow because the arrow is pointing up, and the arrow is also going in the opposite direction of that purple line. So that's already a good trade to take. Now look at my last two confirmations. My RSI is pointing up on the green line. All right. Now I go to my stochastic, and it's also pointing up past the green line. So let's see what happens once this 26 seconds is up. I'm pretty sure it's going to be another candle to the upside just because, that's how cash drop works. You know what I'm saying? Who's on the call? Who's on the call? Hey, y'all 18 people learn something. I'm telling y'all. This thing started out with like 40 something people. But y'all 18, y'all learned something. Boom. What I tell you? Hey, my boy, money maker right there. I'm only saying that because I can see his camera, but like, bro taking notes. Bro's gonna be a money maker. Bro's already a money maker. Oh wait, what happened? The thing was just blue. Hold up, it's still blue. We ain't tripping. All right, so rollover. So I'm gonna do this. This is what rollover is. Boom. Let me see. Alrighty. So let's say that I'm gonna get into a 1 cent trade just for y'all. I'm gonna get into a 1 cent trade just for y'all. All right. So look, this is what rollover is. So let's say that I get into a position. With HFX, I told you it's predominantly support and resistance. So your support, your resistance is going to tell you a whole lot, especially with these markets. So if you you can really trade HFX without even going to the products. You can throw your support and resistance lines on IQ set, on pocket option, on race option, you'll be straight. So look, you see that it's kind of spiked at this area twice already. So you can tell that's already going to be kind of like a key level. And I'm pretty sure it did it sometime in the past too. Look at here. Boom. 2 times. 3 times. So that is going to be a what? A resistance. So let's say that I get into a trade right now for a put. So I'm pretty sure it's gonna go below this line. But let's say that it doesn't. Let's say that it doesn't go below this line. What I could do, oh wait, why I don't oh, I guess it's because it's 1 cent. It won't let me roll over. I should have did too. So what it does is like, if you don't think you're gonna be in profit, well, I'm in profit though. But yeah, let's see if it do it then. All right, so let's say I wanted to roll over because I don't think I'm gonna be in profit by the time expires. I can roll over and it'll deduct some of your earnings in order to, put you in double time. So you're giving up a little bit of the money for more time in the market. So if I would have rolled over, it would have probably been in profit by now. So instead of it being 1 minute, it would have been like 2 minutes or however many I rolled over at. So that's basically what rollover is. Before I end this, are there any more questions? Are there any more questions? Can you show rollover one more time? Okay. So I'm gonna actually roll over. So I'm gonna put a dummy position. So this is already high. It created a new high. So I expect it to go back up. What am I even on? UJ always spiky. I ain't doing UJ. All right. So USD is what? Giving me all these crazy pairs. All right. So boom. Let's do this. So I expected to buy, but I'm gonna put a put. Let's say I put a put, and I'm not in profit. See, I'm in a put. It goes back up. Yeah. So let's say that I want to roll over. I click roll over right here. So what it's going to do is it's going to give me double the time that I pushed roll over. So let's say that I did a minute and at 30 seconds I wasn't in profit and I wanted more time. So it'll now give me a minute left more in the trade in exchange for a little bit of my earnings. So this one should be, clearing out here pretty soon. This better not break even. Yeah, it just means more time. Roll over before I can't roll over at all. Yes, but only if you feel that you need it. Sometimes rollover isn't even needed at all. Hold up, my AirPod finna die. Another one. Can y'all still hear me? Drop a 1 if you can hear me. All right, we Gucci. We Gucci. Yo, I'm still in this trade. Y'all see this? Like, this was only a minute. This was only a minute, and I'm still in it. So I got double the time, and I don't know what you're gonna deduct from 1 cent, but it deducted something. I don't know what. But this should be clearing here in a second. Yeah, I think it cleared already. Yeah, it cleared. All right. Good point. Is there an allotted time that you're allowed to use the rollover option? What is the benefit of trading with cents? I don't see a benefit because you're gonna have to trade a whole lot of times to actually get some bread because you win cents. Now, some people they only like see like 94, 99 cents. I guess it's just the same. I just use it like as like a practice. So I don't be using like a whole bunch of like dollars because you can only do like a $1 position this way. And if you having a a $50 account, $100 account, all 100 of those dollars is going to count. So you don't want to be practicing with $1 positions. I didn't even know you can even trade it. Yeah. So before what I used to do is I used to trade a pocket option demo, but IQCent doesn't have a demo. So what I did was I just be trading in cents See, because you fooling around practicing with dollar positions on the dollar one, and let's say that you want to practice 10 times. So you losing $10. And some people don't got $10 to put back in here. So that's why that's why you sense, because you only losing $1 for 10 tries if you lose all of them. And I'm pretty sure you're not gonna lose all of them. So that's pretty much why I use sense, because switching between pocket option and then this and then pocket option and that, to me is just not worth it. So I'll go from cents to dollars, and then it'll fix everything automatically. So like, let's say that you want to try out a new product, you want to do web slinger a couple times, go into cents, do it 5 times, 10 times. You'll get the hang of it. With HFX, it's just picking up patterns. So like I said, green line, up, down, up, down, up, down, up, down. What's the best way to trade spikes? Don't. I mean, respectfully, just don't trade spikes, because spikes are unpredictable. You want to take unpredictable trades. When we were in FRX, we didn't take unpredictable trades. What we did was we took risk-free trades by moving our stop loss to profit or to break even. You can't do that with HFX. So you just gotta take the best trades. Because if you take the best trades, then one, your likelihood of not clearing the trade are going way down. And HFX is quick. So if you don't find a good position, wait 5 minutes and it could be a perfect position then. So like, yeah, that's what I got to say about that one. Just be patient with it. HFX is still Forex. Can you drop your IG at the end? Yeah, I got you, bro. That's my Instagram right there. Boom. And your YouTube. I don't know the name of my YouTube. I just gotta send the link. I just gotta send the link. Do you prefer FRX or HFX? FRX the move. I mean, yeah, HFX is the move, low key. HFX for the newest member is so duplicatable that you can see money your first day. If you got all your ducks in a row, you just go make money. But with FRX, you gotta nurture them people a little bit. You gotta show them your way a little bit. You gotta show them how to use MT4. You gotta show them how to use the products, the services. You gotta show them about trend lines, support and resistance, all of that. So for beginners, HFX the move. But if you want to get to that advanced stuff, you want to learn how to trade. You want to learn how to trade. FRX is the move. That's for the people who want to learn how to trade, things of that nature. That's what I'm doing right now. So like, cause y'all saw earlier, I have the bounce back. So that's Zach and Jordan. Zach and Jordan, like they're the people who do smart money, and they're too smart for their own good. Like they're too smart. Like they found a way to trade on their own and trade for the company and make 2 bags. Like that's crazy to me. So yeah, that's what I've been doing, like, in addition to HFX. But with that being said, it's already, 10:15, 11:15, wherever you at. So with that being said, if you got something from this call, drop a 7. 7 is the number of completion. This call is done. I went over all 3. Y'all should be making money now. Y'all, if you're not making money after this call, go live, maybe the move for you. And drop the link to your YouTube so you can show love, bro. All right. You know what? Thank y'all. Cause just thank y'all. Y'all were patient. Y'all were one of the 17 out of 40 something that actually plugged in. So the remainder that got off, Y'all go show love in the Elevation Empire HQ. Tell them what they missed out on. Tell them they got a little smart money in here. They got all their questions answered. They got all of that, and now it's just time to make money. Now, like, people be talking, people be bickering, going back and forth. People be like, doing everything except what we here for. Everybody is here to make money, so let's just do that. So that being said, I'm gonna end the call right there. I'm not gonna say, I'm gonna catch y'all at the top because the bottom is too crowded. No, ain't no talk. We're not stopping. We're not stopping. I'm not stopping till I hit $6.6 trillion a day. I'm not stopping till I hit $6.6 trillion a day. So I'm not gonna see y'all at the top because it ain't no top. So y'all have a good night. Y'all get on the charts and make some money. Hold up, how I end this? All right, stop sharing.